Welcome to Daily Currency Update from the Currency Desk. Today, in the morning session, we had a weak opening for the Indian rupee. We had a gap up opening of about 10-15 paise in the US dollar. This was despite the fact that we had some strong PMI figures from the Chinese economy. The PMI figures were at 49.5, which is a 5-month high for the Chinese PMI. Also, one thing worth noting is any PMI level above 50 is considered to be an indicator of good economic health. But yes, this figure is nearly close to 50. Hence, we can say it was slightly positive for the global markets. Coming to the Indian markets, the Indian markets are right now holding up. That is, the rupee is holding its support levels currently. This is mainly due to the expectations that the Indian government will bring in some measures so as to reduce the current account deficits. These measures also include cutting down the diesel prices or maybe even implementing some FDI policy like FDI in retail or in aviation. So until the time these expectations hold strong in the markets, we will not witness any major downside in the rupee against the dollar. But at the same time, we have the global situation deteriorating or rather getting worse. In the Spanish economy, there are continuous increase in the rumors or fears of a full bailout package being required. This was mainly triggered due to 5 to 6 regional governments actually coming up to the Spanish central government and asking for aid or funds rather. Also adding to the woes of the Spanish economy was the fact that we had a few disappointing data figures. First of all was the GDP figures, which indicated that the economic growth actually contracted by 1%, and on a quarterly basis it contracted by 0.4%. The Spanish stocks also fell, indicating slightly negative sentiments which are continuously increasing. So based on the above events, net we had a negative impact on the euro, and for the first time since 2 years we had the euro actually moving below 1.21 levels. The USD index has also crossed over above 83.50 and is currently trading at a new high of 83.89, which is a 2-year high. So this indicates that there is relative strength in the USD and there is some rally in the USD based on safe haven demand. Coming to the UK economy, in England, the Bank of England is expected to come up with a rate cut in the near term in its next policy announcements, that is, and this rate cut is somewhere or the other being factored into the GBP USD rate. But yes, at the same time the GBP seems to be trailing or piggybacking, as we say, the euro, and based on that we had slight fall in the GBP against the USD and also against the INR. Even the Japanese yen is also rallying on safe haven demand, similar to US. This rally has been clearly strengthened by the fact that we have falling bond yields in the government bonds of the Japanese government. So this indicates that people are moving from high risk or medium risk assets to actually lower risk assets. But yes, currently yen against the dollar has become slightly sideways, and this sideways range could well be broken if the Bank of Japan does some intervention or gives any indication of intervention, because already the Japanese yen is overpriced and it is negative for the Japanese economy. It would not be good for the Japanese exports if the yen remains at such strong levels. Hence we could well see some intervention by the Bank of Japan, so investors need to keep an eye on that. We are also witnessing some increase in the implied volatility of USD INR calls, hence indicating a upside bias in the dollar against the INR. The current view for the euro against the INR is upside, and we can well target the second resistance level by keeping a strict and also keeping a strict stop loss. The pound seems to have become sideways, and we might well witness some a good downside rally, but that would not be before the pound appreciates slightly against the Indian rupee. At the same time, against the yen, we might witness some downside movement. If the yen breaks the crucial resistance of 71.90, we could also witness a change in trend and upside move up to 76 levels. Thank you.